Oh man, so Donald Trump has just said that the dollar is under attack. We have also had a horrible jobs figure. This is leading Bitcoin to show some weakness in the charts. In this video, I'm going to break down exactly what's going on and what this could mean for the Bitcoin price, because we've pretty much been acting as a stable coin here on Bitcoin, right? Like Bitcoin's trading at 28,000 there or thereabouts since mid-March, and this is crazy kind of consolidation, but at some point we have to break a direction. So far we are seeing that the bears are just not giving up at this green level. This green level is that 29,000 level which we've been watching for a while now, and they're not having any of it. Our latest attempt was to break out from this triangle, which we did, and we got rejected even before 29,000 and thrown straight back into our triangle. This was led by a few key catalysts. The first I want to cover off is the jobs figure. We did get the ADP jobs figure. Now remember, tomorrow on Friday we get the non-farm payrolls, but the ADP jobs figure gives you a precursor to what the reading could be tomorrow. Now, it takes a little bit of understanding because it's a bit counterintuitive. So the jobs reading last time around was 261,000 new jobs created. Now, this plummeted down to 145,000 new jobs. Now, would you not think this is good? This is a softening of the labor market. Jerome Powell has been saying, I want the softening of the labor market. We also had the JOLTS figure earlier in the week, which showed that 9.93 million jobs openings were there versus the 10.4 expected. This is good, right? We're creating more balance in the labor market. Oh, no. The market is like Goldilocks. The market wants these numbers just right. Okay, if this had came in just around expectations, the expectations were around 200,000. If it came in at 200 or 190 or even 185 or something like that, markets would have been okay. But 145 now has markets very worried. You can see here, I did tweet this. Make sure you guys are following me. I'm putting a lot of alpha on Twitter in between my daily videos. So make sure you're at Real Ijaz One because you're getting extra alpha on there as and when the data comes out. So you can see markets will be nervy that the damage could be bad and could lead to slowdown and recession. And that is what we're seeing right now. You're seeing the traditional markets now down today as well. You can see 0.29% down on the NASDAQ, 0.23 on the S&P, the Dow Jones slightly down as well. They're worried about recession. They're worried that this economy is getting slowed down too fast. Jerome Powell's not pausing, he's not doing anything, and he's damaging the market and pushing us into a recession. In that vein, you can see that just over 50% of the market are pricing in a pause at the next meeting on May the 3rd. Still about a month away. We're going to monitor this as we get closer and closer and see how these percentages change. But markets pretty much are expecting us to that by June. Even if we have one more rate hike in May, we should be done by June and we should be pausing. So that's going to be an important point when we finally get that pause in the interest rates. But that's not it. We also had Donald Trump. Yes, Donald Trump came out and tweeted that China is trying to displace the US dollar as the #1 currency throughout the world. Unthinkable 3 years ago. If this happens, and under Biden's leadership it probably will, this will be the biggest defeat for our country in its history. Now, I don't want this to be about politics. I couldn't care less about the politics. But why do we look at the dollar? We know that the Bitcoin is heavily inversely correlated to the dollar index. Remember, BTC is looked at as a pair against the US dollar, okay? So you need to see weakness in the dollar for Bitcoin relatively to be worth more. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. And we have been covering off over the last few days and weeks here that there has been a coordinated effort by major economies to de-dollarize, to move their dependence away from the dollar. Saudi Arabia, Russia, China, Malaysia announcing the other day that they're trying to set up an Asian monetary fund. This could be huge to then compete against the International Monetary Fund, the IMF. You also had the ASEAN countries, right? All those countries in that Asian region saying that we want to de-dollarize. You had Brazil doing a trade outside of the US dollar. This is a major coordinated move, and it's happening at a time where these major economies see weakness in America, in the US dollar. And could we be seeing the end of the dollar's dominance as the reserve currency? Now, this, of course, will not happen overnight. But the interesting answer then is going to be, what is your hedge going to be? Are you going to wish you were placed in something like Bitcoin when this suddenly goes on a major collapse? And I don't just mean here a fall like we had in 2017 down to 2018. This could be much bigger, right? The fall we're getting right now is a normal fall. But if this falls and loses the floor at around 89 and goes lower, that could spell a lot of pain for the dollar. And relatively, you'd expect Bitcoin to be moving to the upside. Now, where are we sat here on Bitcoin? Well, in the short term, you have seen here on the hourly chart, I am expecting retracement, right? We're falling now down from this triangle. You look to pivot point at 27.5. Will that hold? If it doesn't, you look to the bottom of the triangle. That's about 26.5 as well. If that doesn't hold, you guys know I'm looking at 26k as my level to do a little bit of nibbling. I'm personally going to be nibbling a little Bitcoin at this level, and probably some Ethereum as well. I've been very patient to not do that closer to 29. I want to wait for pullbacks and buy from positions of strength at about 26. Should we lose that level at 26, we're coming down to 25, which is a much more comfortable level for me personally to be buying. Now, why? Why do I like that level? Well, in order to understand that, we have to zoom out here into the daily. And you're going to have to bear with this very busy chart here because I need to illustrate the point. When you look here in this period, we got rejected by 25. Came all the way back down, went back up, got rejected by 25. Came back down, collected some support from 19,600. And then finally we broke through 25. Now, what you would then expect to happen in order to secure that level, because you came down, you got rejected, came down, go back up, got rejected. Now that you've finally broken through. So what you want to see is a retest. You want it to come back down, retest 25 and create a floor. Build a floor there. So you know what? We're holding that level. That's an important level for us. We're not going to go below there. We're going to collect some support, regroup and go mountain attack towards that 30k level and beyond. So that's a perfectly normal level for me to look at and say, you know what? I don't mind 25. And I've been calling for that for a long time now. It's perfectly healthy for the Bitcoin price to come down into that 25,000 level. Now, do I think we're going to exactly get to 25? No, I actually think there's going to be a lot of support coming in. If we start falling into our EMA ribbon, in towards 27, then even into 26, which will bring you about here on my cursor, I think there's going to be a lot of buying power. I think if you look at the Fear and Greed Index, you can see we're sitting at 63. People want to be in this market. They've seen what Bitcoin did from 15,500 to quickly get on the door knocking at 29,000. So what they're going to be doing is there's going to be a lot of people waiting at these areas to be buying around these areas. That's why for me, I'll be laddering in my buys. At 27, I'll start nibbling a little bit. At 26, my nibbles will get much bigger. And then 25 is where I'll set my targets to get some nice juicy buys if we get there. But overall, on this daily chart, a retracement in is perfectly healthy. We've already seen weakness from Bitcoin here. It's consolidating, but we're starting to see the RSI nudge down. We're starting to see volume come down. Look at that. That's volume divergence. When the price is going up, but the volume is going down, that's volume divergence. It's normally an indicator that the price is likely to go sideways for longer or retrace down to build some strength. So perfectly normal here. I'm not too concerned about it, and I am preparing for those levels now. If you look at the Bollinger Band, you can also see this is really starting to constrict now. You had your big movement to the upside. Now it's starting to constrict. Do not be surprised to see us spend a couple of days here in the constricted territory before us setting a direction. Whenever the Bollinger Band constricts, remember, that normally indicates a big explosive move is coming up. So we are now starting to constrict here. Also with the Bollinger Band, you can see we're trying to run into the middle line here, but if we lose that, you could be coming to the bottom bound of the Bollinger Band, which again brings you to that 27k level on Bitcoin. And also, just to remind you guys and give you guys a little bit of confidence about the move that we've just been on here on Bitcoin, there literally is nothing to worry about at this point. And the reason for that is we were below our EMA ribbon a little while ago, right? Just weeks ago, people have forgotten. We were below our EMA ribbon. We closed back above it. We reclaimed it. We're now in a really healthy position where the last 2 weeks, even though they've been doji candles, even though we've shown some weakness within there, we've managed to stabilize this base at 28k. We've not even had to come down to 25 like I've just explained, which is crazy to think of. So even here on this weekly chart, if you wanted to, you could even come down to that 25,400 level here, come back down here, retest, and then go for another move, and that's still bullish. You still hold your EMA ribbon, and that would still look good here on this weekly chart. Now, of course, we're going to need the dollar index and the dollar to continue to show some weakness, and we're seeing that. This is really nice. The dollar index tried to rally into its EMA ribbon late Feb, got rejected, and now look at this. 1, 2, 3, 4 solid weeks of downside pressure on the dollar index. This is a good sign, guys. It's been rejected by its EMA ribbon. It's heading down. We needed to create a lower low. If you look at where this bottomed out here, this candlestick bottomed out at 100.8. So 100.8, where my cursor is right there, we need the dollar index to go below this and create a lower low. That way we can keep this trend moving to the downside on the weekly chart for the dollar index. Similarly, on the daily, we need to see this daily continue to push this below. We need to get below here where my cursor is. Okay, let me just show you that. Below here where my cursor is, so we can keep this momentum moving down. Now, in between there, of course, the dollar index might want to rally a little bit. It might have a period where it wants to rally, but it needs to get rejected by its daily EMA ribbon and then continue to downtrend to the downside. That is what we need from the dollar index for Bitcoin to benefit. In other news, the attack on crypto continues with Binance's Australia's derivative license cancelled by the regulator. Binance Exchange must close all of its customers' open derivatives by April the 21st. We know that they're going to continue to attack. They're going to continue to make it harder for exchanges to operate. And this is a squeeze being done everywhere, right? Coinbase is suffering, Kraken had a fine, Binance is struggling. This is just something which is part and parcel of doing something which is really innovative. And we know that certain Western economies are for some reason just not being accepting of crypto at this juncture. We've also had that stablecoin Tether's market cap nears record high of $83 billion. And I do want to share this with you because for me, this is a little bit of a risk. It's a little bit of an uncomfortable point for me. I've expressed this in previous videos before. Look, Tether have done a really good job. They've navigated the bear market up until this point. They dealt with Bitcoin being 15,500. They dealt with a bunch of FUD, and they've managed to improve their audit process as well. They've even improved their backing. So this is all good. This is not an indictment on Tether. But as a crypto space, I've made videos on this before, whether it's stable coins or exchanges, I don't like that Binance is a clear monopoly, right? They've got the most trading volume by far. I don't like that in the stablecoin area, Tether is a monopoly. They've got the most market cap by far. I want to see more competitors. I want to see a closer number 2 and number 3 in stablecoins and in exchanges as well. We should all want that because it's healthy for the crypto space over the long run. Now, if you're holding stablecoins, you guys know my warning is always the same. Never have loads of money in stablecoins. Use them for what you need them from, but either be in crypto or be at fiat. Don't sit here on stablecoins. And if you are in stablecoins, try to diversify across a few stablecoins so that way you're not sat all in one stablecoin because you don't know which one is going to be the next one to collapse. And same for exchanges, guys. As much as we use exchanges, and I use 3, 4, 5 different exchanges at any given time, I don't know which one is going to collapse next. I do not know which one is going to suffer, which one is going to struggle. We don't know what this could bring. Crypto is a very volatile space, so please take responsibility. Please make sure you're protecting your funds. And at the end of the day, it's cliche, but if it's not your keys, is it really your crypto? That's the whole point about this decentralized money that we're building here in Web3. Hope you guys enjoyed this update. If you appreciate this type of update, smash the likes. Don't forget to subscribe. Make sure you're subscribed because tomorrow we've got the important non-farm payrolls which we will be covering off together. Thanks for watching. Go watch this video here and I'll see you in the next one.